Welcome back to your daily pre-market brief for Wednesday, June 24th. Last trading session recap. The US stock market experienced a notable pullback today, driven largely by a sharp sell-off in mega-cap technology and artificial intelligence names that spread globally. Equities had been enjoying a massive, record-setting run, with the tech sector up over 25% in the last 3 months. But investors finally hit the brakes. High-flying favorites like Nvidia and Micron took heavy hits as traders worried about the potential for higher interest rates, stifling future corporate spending on AI infrastructure. The Federal Reserve continues to signal that rates could stay higher for longer due to sticky inflation and a recent tariff impact that halted earlier disinflationary trends. Additionally, global markets closely monitored the ongoing negotiations between the US and Iran to end their conflict, which could eventually reopen the Strait of Hormuz and ease global energy costs. The indices, commodities, and general market mood. The S&P 500 closed down 1.4% to finish at 7,365. The Nasdaq Composite took the hardest hit, falling 2.2% to close at 25,587. The Dow Jones Industrial Average managed to stay relatively flat, closing down 0.1% at 51,667. Looking at the broader asset classes, gold dropped 1.2% to close at 4,130. Brent crude oil slipped 1.1% down to 77. Bitcoin also saw selling pressure, falling 3.0% to finish at 62,318. Meanwhile, the 10-year Treasury Yield dropped 0.4% to sit at 4.49%, while the Volatility Index spiked a massive 12.8% to close at 19.49. Collectively, these metrics show a market that is aggressively taking risk off the table and locking in profits from recent highs. The spike in volatility paired with selling across equities, crypto, and commodities suggests investors are getting defensive and repositioning their portfolios ahead of more economic data. Top 5 gainers and losers. Filtering out the penny stocks trading under $5. Top 5% gainers. BLZE skyrocketed 44% to close at 11.7 after the company announced expanded enterprise deals. ARQQ surged 36% to end the day at 29.0, following the White House executive order aimed at accelerating quantum computing adoption. MNPR gained 19% to finish at 81.8, as positive clinical trial results sparked heavy buying volume. MAAS rallied 19% to close at 21.2 on the back of upgraded analyst price targets. SGC climbed 16% to land at 13.4 after reporting strong forward guidance for the upcoming quarter. Top 5% losers. JLHL collapsed 26% to close at 19.5 amid rising concerns over prolonged supply chain disruptions. PRTM tanked 22% to finish at 85.0 following an unexpected downward revision in their annual revenue projections. HYLN plunged 17% to close at 6.1 after announcing significant delays in their commercial rollouts. SBMT dropped 17% to end the day at 7.2 due to falling commodity prices impacting their operating margins. FLNC tumbled 16% to close at 21.2 as broad sector weakness forced long holders to liquidate their positions. Top 5 institutional whale trades. BHP, 30 strike call expiring in 577 days, traded 4,600 contracts against an open interest of just 1 for a ratio of 4,600. This exceptional trade is a textbook example of an institutional stock replacement strategy and flashes a heavily bullish sentiment for the long term. With the stock trading at 82.25, this 30 strike call is deep in the money and carries 52.25 of intrinsic value. Instead of tying up over $37 million in capital to buy the shares outright, the whale spends a fraction of that premium to control 460,000 shares. This structure mimics stock ownership perfectly, with high capital efficiency and zero retail noise, while the long horizon insulates the position from near-term market volatility, signaling that a major institution is quietly making a massive structural bet on long-term upside. SBET, 5-strike put expiring in 59 days, traded 4,061 contracts against an open interest of 1 for a ratio of 4,061. With the stock trading just under the strike at 4.96, this position represents an aggressive medium-term bearish bet. The whale is accumulating thousands of contracts on an inactive strike to position for a significant downside breakdown over the next 2 months, leveraging a contract volume that allows them to control over 400,000 shares short with minimized upfront risk. QQ 9. 510 strike. Put expiring in 1 day, traded 3,971 contracts against an open interest of 1 for a ratio of 3,371. Because this put is deeply out of the money, with the stock trading up at 715.44 and expires in less than 24 hours. This trade represents massive tail risk hedging. This is an institutional black swan protection play where a large fund is willing to burn premium on an ultra-short timeline to protect a massive underlying portfolio against an immediate overnight market crash. IRDM, 50 strike call, expiring in 59 days, traded 34,785 contracts against an open interest of 10 for a ratio of 3,478.5. This position shows highly aggressive midterm bullish sentiment, targeting a major out-of-the-money strike. By launching nearly 35,000 contracts on a stock trading at 44.19, the whale is betting heavily on a rapid momentum breakout above 50 within the next 2 months. CRCL, 76 strike put expiring in 24 days, traded 3,006 contracts against an open interest of 1 for a ratio of 3,006. With the underlying stock trading right at 75.65, this at the money put indicates tactical near-term bearish sentiment. The whale is anticipating an imminent downside move over the next 3 weeks, buying 3,000 contracts to profit directly from a swift technical breakdown. These specific option flow signals are critical because the scanner specifically highlights massive volume that dwarfs existing open interest. This helps strip away retail noise and exposes aggressive, new institutional positioning right as it happens. When you see a whale enter thousands of contracts on a strike that previously had 0 or 1 open interest, it indicates a high conviction bet from a major player who is expecting an imminent price swing. Next trading session preview. Tomorrow's session brings a fresh look at the housing market with the release of the US new home sales data alongside the weekly crude oil inventories report. These metrics will give traders an immediate pulse on consumer resilience and domestic energy demand amidst the ongoing geopolitical tensions. However, market volatility will likely be dictated by defensive posturing as traders brace for Thursday's massive data dump. Thursday features the highly anticipated Personal Consumption Expenditures Price Index, which is the Federal Reserve's preferred measure of inflation. If inflation remains sticky, we could see an acceleration of today's tech sell-off as the reality of higher for longer interest rates sets in. Also, keep a close eye on global headlines regarding the US and Iran peace talks, since any concrete resolution could rapidly cool down oil prices and shift broader market sentiment. Next session earnings schedule. Looking at the corporate calendar for tomorrow, all eyes will be on Micron Technology reporting after the market close. After taking a massive 13.2% hit today, investors desperately need Micron to post stellar forward guidance regarding artificial intelligence memory chip demand to help stabilize the bleeding semiconductor sector. We also have Paychex reporting before the bell, which will provide vital clues into payroll trends and the overall health of small to mid-sized businesses in a high interest rate environment. That covers your market brief for today. If you found this breakdown helpful, make sure to hit that like button and subscribe so you don't miss tomorrow's pre-market briefing. Trade safe, manage your risk, and I'll see you in the next one.